Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment, sponsored by the Resource Center. Good to see you.
Good to be here.
How are you?
Another week.
Another week.
Let's see, taxes,
that's
inflation,
something to put in the
volatility. I mean,
yeah,
Same old, same old.
It's all there, right?
Tax time is upon us. So what are we talking about today?
Hey, it is opening day for the Cardinals.
That's
I mean,
a good
there's
thing,
that.
right?
Good thing.
Yeah.
There's that.
That's a bright spot for today.
is.
So, yeah, we should go down and watch a game.
I would love that.
Yeah,
Well, then let's get through this and we'll
A
hit
little
the
bit
road.
windy, but it's not
Slightly.
a bad day.
I don't have to play in the wind. I just have to watch. It's
Just have to
good.
sit there.
We're
That's
covered.
exactly right. Hey, you know, a lot of things going on. I mean, inflation is still there. Volatility in the markets are still there. You know, it's spring, though, and spring brings taxes, so it's tax season. Remember, April 18th is coming, and April 18th is tax day this year. So we got to make sure that we get that done. And remember, when you're planning taxes, and a lot of people put it off because they owe money, well, taxes will be going up probably in the future. I mean, if you were to ask 10 people, do you think taxes are going to go down or up? Well, they're going to go up, right? To offset
that's
this.
kind of the nature of the beast, so to speak.
Yeah, I mean, everything kind of increases. We're further in debt than we were a year ago, so eventually taxes will increase. So I think my tip for the day is when you're planning for next year, it's too late for this year, unless you buy an IRA or something right at the 9th hour, right,
Yeah.
11th hour. But for planning for next year, consider if you're going to need some deductions, consider making contributions to a Roth IRA or a traditional IRA. So if you need a deduction, you do a traditional. If you don't, still put money away for yourself, but put them in a Roth.
Okay.
Now, a deduction reduces how much of your income is subject to tax. So let's say, for example, you're in a 22% tax bracket and you have a $1,000 deduction, it's going to effectively save you $220 on your taxes.
Gotcha.
Now, if you get a tax credit for $1,000, a tax credit reduces the amount of tax you owe, giving you a dollar for dollar reduction of your tax liability. So a tax credit in the same scenario, same tax bracket, $1,000 tax credit's going to lower your taxes by $1,000. So when you're doing planning going into next year, there's lots of things to consider. I always recommend you get some good advice.
Always get good advice. And one thing you mentioned, the tax deadline is coming up. You can get an extension on filing. You've taught us this before, but you can't get an extension on paying.
That's right. So if you're going to owe taxes, talk to your tax people, but you're either going to have to make an estimated payment or come close to that. You can't avoid paying by filing an extension.
Right.
But talk to your tax people. And then inflation and volatility and things like that are there. You know, right now, inflation, the estimate, it's kind of been about this for the last 30 days, but 7.87. I think inflation will continue to go up through the end of the year.
The indicators are such, yeah.
So I think we just need to plan for that. If you've never started saving some of your paycheck, now you might start putting what you can back, curtail your spending and start padding your savings account a little bit, because I think inflation will continue and the markets are up and down and up and down. Volatility is there. And so if you're an investor, if they're down, it's opportunity. If they're up, that's great for all of us, but volatility is there.
Well, I mean, all you have to do is look at the state of the world, the state of the nation, everything going on, and things are volatile.
That's right.
Stock market follows.
It's all reflected, yeah.
Pretty scary stuff.
Yeah.
So I think we got to, and so here's some deep thoughts, you know, Bruce's deep thoughts. You know, you can wonder if the next downturn will wreck your retirement, or you can make a plan designed to weather any storm. So if you're in retirement and you're experiencing volatility and sleepless nights, then review what you're doing. Review the tool that you're using, because if it's keeping you up at night, maybe you need to change course.
Yeah.
You know, a hope and a prayer is not usually a good way to plan a retirement. And so if that kind of, sums up where you're at, give me a call. I'll be glad to sit down and we can visit about it.
Fingers crossed isn't going to cut it.
No.
Well, that's true. There's too much volatility.
Hurt, but no.
Yeah, so QR code, call us at the Resource Center, 882-1800. Be glad to visit.
Good stuff. Good to see
Sounds
you,
good.
Bruce.
Thanks,
Thank you.
Bruce.
See you next week.
We'll be right back.